When you're buying your home, it's easy to overlook structural defects, shabby brickwork, broken down boilers, and faulty electrics. On this video, I'm going to share 3 survey types and when to have them. Coming up. What's up peeps, Alex Kerr from Mortgage Chain. I'm a qualified mortgage broker. My passion is helping you with your home buying process. And on this channel, we bring mortgage tips to first-time buyers and business owners. Let's jump into the video. Right, I'm going to start with a basic valuation, okay? The only sole purpose of a basic valuation is to serve the mortgage lender, okay? It's for their purposes. It does not provide you with a valuation report or any real information of any value, apart from how much you're buying it for. If the lender or the valuer thinks there's anything the lender should be aware of, they will mention it in the comments. When buying your home, the mortgage lender will use the property as the security to lend you the money. So as far as they're concerned, all they need to know it's worth what you're buying it for. Okay, that's a basic valuation. You have to have one as part of your mortgage application. If you want a more in-depth survey or valuation, they both mean the same thing, then go for a home buyer's report. Home buyer's report. Research has revealed that many first-time buyers set themselves up for unforeseen repair bills, and it can pay dividends to have a home buyer's report. This will help you find out if there are any structural problems such as subsidence. It will also check for any unwelcome issues such as dampness, and will look at your heating and electricals. A home buyer's report doesn't look beyond the floorboards or behind the walls. However, it can unearth some unforeseen repair bills which later on down the line will cost you thousands. And if that is the case, you can go back to the seller and negotiate a better price. A full building survey. This is really a comprehensive look at the property and building structure. Really for the disconcerting buyer, or if you're buying an old property, if there are any works that need doing, or if you plan to have some yourself. It is ideal for either older properties, Victorian, or maybe non-structural properties. It is very extensive, and I normally recommend my clients, if they're buying a Victorian property or a really large house, you know, around the 1900s, then it's certainly worth going for a full structural. Again, it doesn't go beyond the floorboards or behind the walls. However, the valuer will look out for hidden defects. It will provide you the most full and comprehensive survey report money can buy. Now, a full structural survey will need to be carried out independently, okay? The lenders do not provide it as part of a valuation or a home buyer's report. You need to have it separate, and the lender will also require their basic valuation as well, okay? So a full structural survey can cost considerably more than a basic or a home buyer's, so you need to take that into account. The costing generally starts with a basic survey, which is the lowest cost, and it's tiered dependent on the purchase price of the property. Generally speaking, when you go to a home buyer's report, it is twice as expensive as a basic survey. Lenders will provide them coupled together, and a full structural survey will generally be 3 times or 4 times as much as a basic valuation. You'll need to have that independently. Okay, so generally speaking, a home buyer's report is always a very, very good survey to go for. Will provide more of an in-depth report than the basic survey. The basic, remember, is just for the valuation, just for the sole purpose of the lender. Full structural, older buildings, larger buildings that have been renovated, or if you have planned to have, you know, some renovations done yourself. Always good to look at a closer look at the structure. Question of the day. Have you got a property in mind and you're not sure what valuation report to go for? Let me know in the comments. as a responsible mortgage brokers, we are obliged to tell you that your home may be repossessed if you do not keep up repayments of your mortgage. So thanks for checking out this video. If you're new to this channel or we're meeting for the first time, please consider subscribing or ringing the bell. Check out the show notes for a recap of the valuation types we've discussed today. Until next time, Mortgage Chain are bringing you the best mortgage tools and tips to first-time buyers and business owners. Keep crushing it, and we will see you soon.